Hello, theorist Neil here again, and welcome to Option Theory. We are doing our weekly cherry bomb recap. We are not putting on a paper trade today, but of course we will take a look at our portfolio that we've been building, take a look at the market conditions over the weekend, really since they started trading Sunday at 6 p.m. Eastern Standard Time here. So, as always, let's hop right into the platform. Enough with me. And here you can see our monitor page is up. And yesterday I released a video on the account statement tab, and we're going to be using that actually today. So it's a good thing we did that, right? So what have we done since we last did our recap? To find out, we're going to click on this account statement tab, and we're going to change our accounts from total all accounts to the margin account in which we've been active. And then instead of seeing one day back from today, I want to pick the time frame, right? So clicking on the date, I want to say that we started, the recap was on the 9th, right? But we didn't do any trades or put on any trades. And that's not true because I ended up doing some trade management, right? Try to improve our situation. So with that, now we go over to order history, and we can see it was quite busy, right? A couple of cancel orders, 11 fills. So when we twirl that open, that's what I want to see. Trade history. Excellent. So you can see all of the stuff that we've done here. And by the way, let me drag this onto the screen here for you here. I've been keeping track as best I could in my spreadsheet as well. For what purpose, I'm not sure yet, but it's good to have it. These are the trades that we've put on. So we adjusted our Qs in our EWW position. Actually ended up closing the Qs. And so why don't I talk you through what ended up happening? So on the 9th, when we did our last weekly recap, I ended up looking at the number of days to expiration left on our Qs and our EWW, and I realized it was time to roll down the untested side of our iron condor. Right, so we stayed within the same expiration and then just rolled it down till it was at the short put strike. So I took pictures of screenshots on that same day. Here, let me pull that up for you. So we'll start off with EWW. So this is what, so imagine the iron condor was very flat across the top and then came down like this. So I rolled that down so that the short call matched the short put, and you're left with an iron butterfly here, right? So at that time on the 9th, you could see that the underlying price was pretty close to being in a range where we would like it to be. Well, as luck would have it, let's go take a look at our Analyze tab here. We're on EWW, and it has continued its downward slide, right? So it's way over here now. So sure, the probabilities of us making a profit on this trade are not good, but we are at a better point, at least as far as we've reduced our potential max loss to the downside. So remember, you're not always going to be profitable, but if there's things that you can do to improve your situation. Now, is there something else that we could do? Yeah. Could we go inverted and bring this closer to here and collect a little bit more of a credit? Yes. Am I going to do that? No. I'm going to let the probabilities play out and see what happens. Or I should say the initial probabilities. The current probabilities aren't that good. But honestly, I'm expecting to take a loss on this one. That's fine. Okay. So back to now the Qs. Let me double click that. So I think something wacky happened here with the Qs because I was set to collect $1.97 and I ended up collecting a $3 credit on this. And thanks to the magic of set it and forget it orders, I was able to to close it almost immediately after the trade rolled. And I believe, let's pull up that spreadsheet again here. Yeah, so Qs, close. We ended up with a $123 profit on a trade that was losing for quite a bit. Thanks to quite a bit of market volatility. I mean, you've been looking at the, we'll take a look again, of course, too, but seeing the movements up and down are pretty big recently. So that's what happened in 2 trades we closed, right? So we rolled here. That's why it says condors, right? And then we closed the iron condor for Qs. Then on Tuesday, we opened up a, and once again, another one of those crazy, wacky, volatile days. I opened up a short put vertical, $5 wide for a $2.35 credit. Wasn't expecting to get that much, but that's where it filled at. And then shortly afterwards, thanks to a big up move, it quickly closed, and I was able to collect a $130 profit on that one. Yep, in a matter of moments. So fast action on those days. And then here we see a trade that is not working out for me, but when we put it on, the probabilities were pretty good. The probability for this short Macy's put was 72%, and now it's not looking good at all. But that's all right, because look at it. It was a strike price of $9. So if we took a max loss and Macy's became worthless, right, we would lose $900. Minus the $82 we would collect, right? So, yeah, all right. We've got that Macy's on. Let's take a look at that right there. So positions, Macy's, right? So let's shrink that up there. And we can see here, this is where the current underlying is right now. So we have some time till expiration. We might end up long Macy's, and I'm okay with that. If we end up long Macy's and we can sell some calls to reduce our cost basis, let's see what happens there. And now we go to the VIX trade here. So we put on some volatility, saying that volatility was going to go down. It didn't shortly after it was a loser. And then we had a nice up day somewhere in there, and it came down a little bit, but nothing massively profitable for it was less than $10. And if you're looking at my watch list on the left over here, you're probably going to see this is going to turn into a bigger loser. All right, now we move on to Love, which is hard to love this trade. So we sold a naked put in Love back on the 5th of March, collected $2.25, and then it just lost thanks to the current pandemic. And so I decided to close the naked put, take the loss of $635, and then go long 100 shares. We got in at 36.23, and then I sold a call to reduce our cost basis for 80 cents, and that strike price is for $50. So that in the end, should Love go back up and get called away from me, I will definitely be making a profit. But in the meantime, should it stay below 50, I'll continue to reduce this cost basis by 80 cents, and I'll rent, if you would, I'll rent these shares until I can reduce it as much as possible. All right. And then our final trade for the week was our crude oil trade, futures. And last I looked, that was working out for me. It didn't work out for me on day one, though, because oil went back up that day. But I kind of noticed that. I don't know if you noticed that. When you're putting on these short trades like this, it tends to continue in the direction it was going, and it feels like a loser. And then it becomes a winner. So right now we're at $230 of profit, which is, I would consider possibly taking this off. So depending on what we have going on, and it's not like I need for the market to wait for the market to open. We're already down 5% in oil for the day. This might be something I take off, because that's pretty good size amount of profit in a short amount of time. So we'll keep an eye on that. And with that is our portfolio recap. What we need to do, of course, is just take a quick look at the things that are going on over here. Let's take a look at the chart for the S&Ps, right? So let's zoom in on the past few days, right? So that was the up day there. Thanks, Microsoft. I'm pretty sure that was it. And we're looking like we have another down day coming up here. Notice, though, that the down day opened up here. It gapped up, right? It closed this 240 something. That was the low. Let's call it, I can look up here. Closed at 2449.75. But then this one opened up at 26.31. So it gapped up, right? And it's on its way back down again. Could I tell you where it's going? Absolutely not. If someone tells you they know where it's going today, they're just guessing. And then, of course, people can be lucky. All right, so another weird thing that's going on in the market, that while the market's going down, you'd expect gold to be going up. It's not. Strange. All right, NASDAQ is also down roughly the same amount as the S&Ps, of course, nearly 5%. So it's not looking like a good day for the bulls, and that's really it for our recap today. I hope that you enjoyed our little recap. I hope you're getting in these trades with me. If you are getting in these trades, put a comment in. How are you doing, right? Are you profitable? Are you taking losses too? Remind yourself this, though. As bad as these losses might look here, with a overall profit and loss that's negative from, right now I'm down $272. In a market where you see charts that look like this, right? I'm thinking 272 is not too shabby, right? Plus all the learning you're doing here, right? You're investing in your learning right now. And it's all paper money. But yes, we should pretend that this is real money, right? Mindset's everything on this one. All right. That's it for this week. I hope to see you tomorrow. Tune in, subscribe, and we will put on some more paper trades.